Namaskaram. I presume many of you have done the reporting under 27A because that's a mandatory field. And if assessee is going for tax audit, but obviously he might be under GST registration only if there is a special exemption on his product or services. He may not be registered, but if it is registered, then 99% cases it is registered only. We have to do the reporting under this particular clause. So what exactly we talk about under this particular clause? You know that how much ITC is availed by the assessee. Okay, availed means how much ITC he had taken during the previous year, how many purchases is done. In technical term, what was the balance in GSTR 2A during the previous year. Out of 2A, how much ITC he has actually utilized while filing GSTR 3B. So utilization. So many of my students, they get confused between these two words, availment and utilization. So to explain them in a better terms or in a simplified manner, it's like if you are using a Paytm. If I deposit 1000 rupees in a Paytm, that is availment. 1000 rupees is there. Now I have not utilized that money. So I have deposited 1000 in a Paytm. So that is my Paytm balance. Now my Paytm balance becomes 1000 rupees. Now whenever I am going to have a tea or snacks, I'll make payment 30 rupees, 40 rupees. So from this Paytm balance, whenever we utilize, only that much amount will be utilized and balance amount will be still there in the balance. So this reporting is happening here. How much ITC is availed by you? Availing ITC means taking ITC in your account, and utilizing ITC means whatever balance of ITC was there in your e-credit ledger, out of that how much was utilized during the previous year. Obviously, if some balance is left over, then that balance also you have to disclose. So what is the format here? So you have to write down what was the opening balance from the last year. Now GST credit everybody knows. Some people may not be aware about CENVAT credit. So central value added tax credit we used to call it. It was for excise duty, it was for service tax, and it was for special custom duties which we call as a CVD. Okay, so these three duties were called as CENVAT. Excise duty, service tax, and CVDs were known as CENVAT. It is not talking about VAT. Okay, it is not state VAT reporting. It is a central VAT reporting. And right now the service tax is completely abolished. This CVD is also completely gone. Now excise duty is still there on tobacco and tobacco related product. So unless and until your entity is into tobacco manufacturing, or at state level it is into alcoholic manufacturing, and for petroleum product, yes, again for 5 petroleum product, the excise duty is still going on. So if these products are there, then only you will have the CENVAT reporting, otherwise you will not have a CENVAT reporting. Now everybody is doing the reporting under GST ITC. Yeah, so please remember that. Next, opening balance means it was unutilized balance of the last year. What was the CENVAT or ITC availed during the previous year? How much ITC is utilized from that? And what is the closing balance? So if opening balance was 1 lakh, ITC availed during the year is 5 lakh. So total 6 lakh you are having. If out of this you have utilized only 4 lakh, so 2 lakh rupees will be closing balance of this year, which will become opening balance of next year. Now what is the treatment in the profit and loss account? Whether you are following the inclusive method of giving these taxes, have you debited these taxes to the P&L account or not? Okay, so whether it is charged to the P&L account or whether it is done from current asset current liability ledger, that you have to mention. That means whether you are following the inclusive method of taxes for accounting purpose, or whether you are following the exclusive method of taxes for accounting purpose, that you have to mention. So this is the very common clause that you are having, that is section clause 27A, very important clause, mandatory reporting. Yeah, clause 27B is little exceptional. It may or may not be applicable to your entity. This is talking about prior period items credited or debited to the profit and loss account. So this is applicable only if the assessee is following the mercantile system of accounting, because in cash system of accounting, anyhow we don't care whether the expenditure is belonging to current year, future year, or past year. Whenever you are making the payment, you will get the deduction. But in mercantile system of accounting, government is little concerned about whether actually expenses belong to this particular years, so it must be incurred during the previous year. But sometime, yeah, a rectification of error or some items which were omitted during the last financial year, or you are making payment in the current year, you are incurring expenditure in current year, but it is belonging to the past 4 years. So sometimes those type of expenditure comes, and that time you must do the reporting. Only reporting is required that okay, these expenses belongs to year 1, year 2, year 3, and we are paying in year 4. Okay, so here you are doing reporting that how much of that particular expenses is belonging to the previous years. So that's one of the reporting which is happening here. So one example they have given in this audit practical understanding, I'll read it for you. Verify various expense accounts to see whether any expenditure pertaining to the earlier year has been debited to the profit and loss account. For example, an assessee might have paid some certification fee for 4 years, under the audit. Okay, in that case, the expenses for previous 3 years would be prior period items, and for that disclosure is required here. We are not talking about allowability and disallowability, only disclosure we need to have here under clause number 27b. So this is it. It is not that difficult to understand, and majority of you are already doing the reporting under clause 27a. Thank you.